Welcome to Pressure Points. Our topic is Robotaxis. It was a big week for the theme of Robotaxi. I think really was the most important takeaways from Tesla and Waymo, and also what we heard from the White House. So I wanted to recap what's going on and what it means for these companies longer term. And maybe just for starters, let's kind of outline the size of this opportunity. Is in 2024, there's about 4 billion rides on Uber and Lyft in the US. That's with a B, and that's growing at about 5% a year. So kind of assume that that's fractionally above 4 billion for 2025. Average ride for the gross dollars is about 21 bucks a ride. So you get about an $88 billion TAM as it stands today in the US. And when I think about that TAM, I wonder, what are investors willing to pay for that TAM? And I think a revenue multiple, given its growth rate, and I think the potential around higher profit margins with autonomy as you get rid of the driver, should trade at, call it a 15 multiple on that TAM. In other words, I think that there can be, call it 1.4 trillion in investor value that can be created around ride sharing just for the US. Now, if you compare that to really the two companies that are going after this right now, Waymo, our last round last year, rumored to be around 50 billion, 45, 50 billion. And if you look at Tesla, hard to say what investors are pricing in for Robotaxi today, but the overall market cap is, call it 900 billion. And so I think that if you put those two together and make a guess on what Robotaxi is as Tesla's valuation today, maybe it's 100, maybe it's 200, but you combine those two, 250 billion, it's still a long shot from what I think investors will ultimately value this market at. So that's why I think that this is an important topic, is this is a huge market. It's a really sleepy market because we don't really, it's hard to connect the dots to when this is going to be monetized by these companies. But I think it is a very real market. So that's the high level. Let's jump into why I think that this is the most important thing that came out of those earnings this week and from the White House. And I'll start with the White House. And this came later in the week from Sean Duffy, who's the transportation secretary. And I'm going to read you a quote that he said is that, quote, "This administration understands that we're in a race with China to out-innovate, and the stakes couldn't be higher. As part of the Department of Transportation's innovation agenda, our framework will slash the red tape and move us closer to a single national standard that spurs innovation and prioritizes safety," end quote. Now, I want to highlight a couple things that jumped out to me. One is slash the red tape. And the red tape right now, a lot of it is related to how the reporting is and the frequency of reporting that they have in terms of number of engagements, number of accidents, and what happens with these accidents. And safe to say is that there's a lot of scrutiny on any sort of misstep with an autonomous vehicle, whether it's Tesla with FSD or whether something happened back in the day with Cruise or Waymo. And there's a lot of red tape that comes around that and kind of monitoring all that. So it sounds like that they want to reduce that amount of red tape for Waymo and Tesla. I think the other piece that jumps out is prioritizing safety. And the safety question to me, this one is a little bit of a maddening topic because, of course, the scrutiny that these robots are getting is never really compared against humans. And humans are great drivers when they're focused, and that's becoming progressively difficult for people to do. The net of this is that cars are still dangerous. 40,000 people have been losing their lives a year in car accidents in the US. It's a grim data point to share, but reminds me of, I think, what's at stake here. And I think that the standard should be less about is the robot perfect, March of Nine's question, and more about, is it better than what humans can do? And I think in this case, I hope that that's when I hear about prioritizing safety, that is factored into what Duffy is talking about here. And so overall, just encouraging comments from the White House that are good for both Waymo and Tesla. And kind of going in reverse order in terms of the updates this week, Google and their earnings. I think this Waymo data point was probably the most exciting part that's going on in their business. They mentioned the number of paid rides is now 200,000 per week. And that compares to 150,000 a week 3 months ago, 100,000 per week 6 months ago. We go back to May of 24, they did 50,000. So just to give you kind of a sense, basically a year ago it was 50,000. Now it's 200,000 per week. Now they're expanding, they're adding other cities. That was part of the update too. Cities that they're adding, Atlanta is coming up, and Washington, DC. And Mark Mahaney, thank you for asking this question on the Google earnings call. Like, what's your path forward for monetization? And I was surprised to hear Sundar say this is the first time that they've had that question about Waymo on their calls, but we'll take it as accurate that investors are kind of slowly coming to awareness that this is an important part of Google's story too. But he answered it saying, number one is that they're pleased with that was the word he used, their partnership with what's going on with Uber, which kind of surprised me because I think they should eventually just kind of cut Uber out. I understand why that's really important to still have Uber, but he said they're still pleased with that. And separately is that they may entertain a model where consumers can buy a car and put it into the network, very similar to what Tesla has talked about. And so that one definitely caught my attention. And I think that the net of this is that they get it, Google gets it. I think that the investment community is increasingly understanding what the opportunity is here. And I think ultimately this is probably a public company. Back in last November, Brian, who I work with, and we put together a piece that kind of looked at what this ultimately could mean for Google, and kind of came out with this, call it $300 to like $800 billion addition to their business. So pretty wide range there, but much higher than that last round that Waymo had. I want to change gears and talk about what Tesla had said. And it really is a pretty straightforward comment, which was that they're still on track to launching a paid for service in June in Austin. And there was some debates whether or not that would actually happen. And it sounds like it's going to be a pretty modest kind of a start. Call it 10 to 20 vehicles, I think was suggested. There's still some debate whether humans will be in those cars. I just want to put my 10 cents in that I think probably the initial ones will have humans for safety perspective. I think that may be viewed by some as kind of watering down the initial experience because there will be a person in the car. I'm not disappointed. I wouldn't be disappointed by that. I think it just makes sense. Like, you're just getting into the game. You're having outside people jumping into your cars. So let's have a human in there. And my sense is that this year is going to just be very slow, limited number of vehicles that are going to be participating in the ride hailing opportunity for Tesla. But of course that can ramp. And I think that if I was going to compare the two models between Waymo and Tesla longer term, I think Tesla has a big advantage because they have an advantage in terms of the cost of the vehicle. Of course, rumored that Waymo's at around 100,000. Tesla will probably be sub 30,000. And I just think that that's going to put a lot more vehicles in the market. I would just mention one other thing in terms of Tesla and Robotaxi. And I think this is part of a reason why, or this brand damage that we've seen kind of on the car side, it could have an impact on Robotaxi. Probably not much of an impact this year because I think the number of vehicles are going to be pretty limited. But it is something to remember, is that how people feel about the cars, purchasing the cars, and that's been an impact on causing deliveries to be down 15% year over year. That can impact how people feel about jumping into a Tesla ride-hailing product. So over time, I'd put a year from now, I think a lot of that brand damage is going to go away, and I think people are just going to kind of move on and want to choose the car that's the best value for your dollar, and want to choose the ride that's most available, that's cheapest. And I think that Tesla's going to be in a good spot to move there. But the news from the White House this week, positive for Tesla, positive for Waymo. Overall, welcome Robotaxi to a broader audience with the Google investors. And I'm looking forward to seeing how this continues to accelerate in the months to come. On behalf of Pressure Points, I'm Gene. Bye for now.